I've been an analyst covering stocks, commodities, global macro for almost 15 years. I've been covering China for over a decade, and I've never seen a story like this. So over the last 4 to 6 weeks, the Chinese Communist Party and their subsequent agencies have been announcing very draconian policies to try to cap metals prices. So these are draconian price controls on commodities. Well, recently we just got another story coming out that for the first time in over a decade, Chinese government agencies are planning on selling actual metal, actual base metal, so copper, aluminum, zinc, and others into the market. And also on the Shanghai Metals Exchange, they're enforcing price controls and trying to knock down bids below the spot price. Insane. So as I've been saying for weeks now, the official Chinese policies have been to try to cool off metals prices. So a temporary drop or crash in base metal prices has seemed to be the main policy goals, with a bunch of different draconian policies that I've covered a month or so in prior videos about different policies that the Chinese government and their agencies have tried to implement to get copper, iron ore, steel, zinc, and other base metals back down to normal prices. And a lot of this has to do with inflation and stagflation and higher production costs in the Chinese economy, especially with manufacturers and the producer price index, which was showing a high cost increase for a number of quarters now. So in the short term, it's these draconian policies that are going to try to reduce demand, and so China's trying to force a correction or cooling off period for at least a couple months, maybe a couple quarters. So unless China starts buying massive amounts of US treasuries again with their trade surpluses and foreign exchange reserves, which is unlikely because over the last 6 to 8 months, about $1 trillion, I think, has gone into the Chinese banking system in foreign exchange reserves, an enormous number with the trade surpluses that they're running. So that's not just with the US, that's globally. That's with the European Union because of how much Chinese manufacturing compared to other countries, how China came back online faster. So overall, China's going to have to start buying commodities again, but with the policies that have been implemented the last 6 weeks and this new policy, they're definitely trying to manipulate the commodities markets, especially base metals prices, and cause a sell-off or crash. They want it to cool off. If you disagree, you can comment in the comment section. But again, I've been covering China for a long time now, and I've never seen policies this draconian to try to get metals prices down to cool them off. In the past, what China would do was they would just simply stop buying for 6 months, a year, maybe even 18 months or 2 years to cool off the commodities prices rising, a specific commodity or a specific couple metals. But the cost increases, the amount of inflation, the amount of stagflation in the supply chain, how quickly the real inflation rate is, how quickly costs are going up, that seems to have policymakers in China worried. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, analysis, and financial education, there is a lot more in-depth content behind the paywall over on my Patreon for only $5 a month. There is over 170 articles, charts, and audio podcasts exclusive for patrons, including 16 new in-depth articles out in the last 6 or so weeks on a lot of interesting topics about global macro, companies, and sectors. I just put out an update on how the oil and energy costs are going to drastically affect profit margins for regular gold, silver, copper, and base metal miners compared to royalty and streaming companies. If you want more in-depth analysis about this, it is only $5 a month, the cost of an overpriced cup of coffee. I'm not charging a lot. In fact, I'm charging less than anyone in my entire space for premium content. So definitely check that out. I think you're really going to like it. I think it is one of the best values out there in my space, if not the best value. And thank you for listening. So bottom line here, we are seeing over the last 4 to 6 weeks a lot of very draconian policies out of China, both on the demand side and the supply side, to try to get base metal prices, so your copper, iron ore, steel, zinc, some of the other base metals, to cool off or crash because China is worried about higher input costs and inflation. And that will also affect the cost to build new mines in the future if base metal prices start rising again.